Hey folks, I just wanted to do a Tesla update. Like I mentioned in the last video, Tesla was coiling up for a big move. I mentioned there was this gap here, and more likely than not, this would be an island reversal situation where the price would go higher and fill this gap after earnings and then continue heading upwards. Today is Thursday, so we just had Tesla's earnings come out yesterday, and their profits beat the market estimate by 21%, which is a pretty big surprise, and that's why we're getting this big move up. And I mentioned I would continue to make bullish trades if it went higher or bearish trades if the price were to go lower. So now that we know earnings was good and the price very obviously cleared that gap, here you can see yesterday in the afternoon, the earnings was released right here. The stock climbed higher and it came back and it did a retest on the 50 exponential moving average, bounced right off of there and continued going up, which is very bullish because anytime the price is above the 50, it means it's likely the trend will continue heading that way higher. So it didn't even bother to retest the higher edge of the gap. It basically just filled and away it went. So bullish trade ideas for Tesla. One thing you can do is to buy another call spread. So similar to the trade I put in earlier in the week, my short iron condor where I was both bullish and bearish. I just didn't want Tesla to close at expiration between 215 and 225. And it looks like at this point, it's not going to close below 225. So I should be safe there, which is why my strategy is up $51 so far. And eventually that should go higher by the November 1st expiration date. But in terms of what we can do here, I'm going to put in a couple of different strategies. I'm going to do a bull spread, and then I will do a covered call strategy. So I'll place two sets of trades today. In terms of the bull call, I'm going to go back to the daily chart. So I'm going to buy an at the money call spread. The price is about 257 right now, 258. So I'm going to go to November 1st as my expiration, which is next week. This will coincide with my other options expiring at the same time. And I'll buy the 255 and I'll sell the 260. And I will pay about $245 for this option spread.
Order filled.
Okay, and then that filled at $247. So this trade is based on the fact that Tesla shares are going higher now. And by the end of next week, I expect it to be at least a couple dollars higher than it is right now. And that way I can make 100% gain going from paying $250 for the spread to earning $500. In terms of when I would get out of this position, if it starts to lose money and the underlying goes down, basically this level here, because if it goes back into the gap, there's a chance it's going to fill that gap and I would lose even more money. Otherwise, I'll probably just hold it to expiration. So the advantage of trading this options rather than just buying the stock price is if the stock price goes up like 1%, then you only make 1% buying the stock. But the same 1% move in the stock price can net you 100% gain in options. Now, the opposite is also true. If the price goes down 1% to like 255, then I would lose 100% of my call spread because then it would be worthless anything below 255. But since the momentum is strong, like if I go to an hourly chart, you can see everything is just off the charts right now. The RSI is at 88. That is very high. Anything above 70 is considered overbought, and now it's really overbought. RSI slope hasn't really gone down yet. It might stay overbought for quite a while longer. MACD also very high right now at 9.78. Like I don't think it's done that at all this year. 9.7. So right now the MACD is over here. Like you have to go back to, what is this, March of 2022? So over 2 years ago before that happened. And what happened during these times, I'm going to add some green lines to previous instances where the MACD went above 9.8, 1, 2, 3, back like a few years ago. And my option is expiring 1 week away, basically. So I'm going to go to the daily chart. And what happened to the stock price of Tesla after a week? So 5 trading days after each of these green lines. 1, 2, 3, 4, 5. This one ended higher. The next instance, 1, 2, 3, 4, 5. This one finished flat. Well, kind of slightly higher, but pretty much at the same price a week later. And then from this green line, 1, 2, 3, 4, 5, also higher. So during the last 3 instances where the MACD went to this crazy high, a week later, Tesla shares went either flat or higher. So it did not go down, which bodes well for the trade I just put in. Now, maybe somewhat interestingly, if you look at what happened a couple weeks after that, though, you can see the euphoria kind of wears off, and then the market from then on decided to go down all 3 times. So I'll have to keep that in mind, which is why time frames are really important to make trades like this. You want to make sure you're in the time frame that makes sense for the strategy that you're using. So for example, this one's a shorter term one, just 1 week, to try to capture this momentum that we're seeing starting from yesterday afternoon. However, you can also put in like a longer, maybe like 3 or 4 weeks out kind of trade. So that's the other one I'm going to show right now, which is a covered call. For a covered call, I like to use a longer duration to take advantage of higher premiums and potentially take advantage of more time decay value. So a covered call strategy is basically when you're neutral or bullish and you basically buy shares and then you sell an out of the money call option on it. In this hypothetical scenario where the stock is $100, you would first buy and own 100 shares, and then you sell the option with the price strike of 110 and collect the premium. In this case, the premium is $3 per share. So if the price were to go up, then you would make money on not only the shares that you already have, but also from the premiums that you sold. But because the call strike is at 110, if the stock price goes past that, then your shares would get called away and the maximum profit you would make is $13. The downside, rather than only buying and holding the shares, is you just cap your upside. But because I'm entering Tesla as a trade, I'm okay with getting those shares called away. So the first step is to buy Tesla. I've already done this yesterday on October 23rd at 118. So this was after the market closed. I bought 100 shares of Tesla for 230 per share. And now I'm going to sell a call option against my shares. And because I'm holding these 100 shares, one call option would be covered by these. So if Tesla goes to like $400, I would lose a lot of money on my short call option because whoever I sold the option to has the right to buy 100 shares of Tesla from me for whatever the strike's going to be, which is at a huge discount from the $400 market price that I just made up in this scenario. So the 100 shares that I have is going to cover for me so I don't have to be out of pocket the difference. So after you buy the shares, there's a couple things to consider, right? There's the strike price and then duration, like how far out you want the option to be. I like to look at duration first. I think that's going to determine what my strike price should be. So for example, if I zoom out on the daily chart here, and this is roughly 1 year of history, and I just draw a line from the top point here and then coming down to touch these 2 points, this kind of forms a rough line of resistance. And if I extend that out, you can see if I believe that when Tesla comes to this line, it's going to maybe do a pullback. There's going to be selling pressure at this line like it's happened 3 times before. Then I probably don't want to place my strike higher than that. So that's why I mentioned I look at duration first, because if my option is expiring a week from now on November 1st, then you can see the resistance line is at 262. But if I choose 2 months from now, let's say December 27th, then that resistance is going to be 257.5, so a little bit lower. In this case, I'm going to choose a duration of 3 or 4 weeks because as we've seen in the past 3 times where the MACD went this high, 3 or 4 weeks after the MACD spike, the stock price went lower. So looking at my option chain here, I'll choose maybe a November 15 expiration. That's a monthly, so it's one of the bigger ones with more liquidity. November 15th would be right here, and it looks like that resistance line is going to be about 260, so roughly where the price is at right now. And selling a covered call is as simple as just selling one leg of a call.
Order filled.
Okay, and that filled at $15. And in terms of when I would close that position, well, if the price goes beyond this line, then it's likely going to shoot much higher, and I'm okay just getting my shares called away because I'm still going to make the difference between when I bought the shares at 230 to 260, so that's $30 plus $15 per share with the short call option. So that's going to be a total of $45 times 100 shares, 4,500 on whatever capital I used to buy those 100 shares at, which is 230 times 100. So a 20% gain in a few weeks is pretty good. If the price goes down as I would expect it to by November the 15th, and it goes within this area over here, then I would probably get out of my position. So I'll still make a profit from the shares and a little bit of profit from the call option because it'll be worth much less if the price were to drop. So to recap, I have a couple of trades here. The Tesla short iron condor I put in earlier this week, a Tesla bull call, which should make money if the price goes up in the short term. And then in terms of individual options, I have one short call at 260. You can see my position is -1, meaning I sold this call. So I'm short this, meaning I want Tesla to go down by November 15th. And it looks like I'm already up $24 on this trade and $4 on the previous one. Anyway, I'll keep an eye on that and give another update to see how things go. And from here, it's just about putting in new trades and managing those risks. So thanks a lot for watching. Good luck with your investments, and until next time.